Welcome back. A busy week ahead on the economic front. All eyes will be on the new Finance Minister, Enoch Godongwana, as he delivers the medium-term budget. eNCA's Money Desk will be in Parliament on Thursday to bring us up to speed. But business editor Devan Murugan is with us this afternoon to give us the lowdown. Devan, first of all, what's the purpose of the medium-term budget, and how's it different from the main budget delivered in February?
Yeah, I think that's a question that escapes many people who watch the budget. I mean, look, essentially it's this. You have the February budget, and what happens there is that the finance minister sets out some principles on spending. In other words, he allocates money to housing, to health, to education. And he also pronounces on taxes in the February budget. What happens in the medium-term budget is that he takes stock of the spending plans he had in February. Things may have changed in the economy. As a result of that, your spending plans and the revenue you have would change. So what the finance minister, the new one, Enoch Godongwana, is placed in is he's got to take stock essentially of whether or not we've had any changes to the plans that we put forward in terms of spending in February.
So, Devan, what is he going to be looking at? What has changed since February, and what are we going to be looking out for as South Africans?
Well, look, you know, we're still in the midst of feeling the impact of COVID-19, so already there's a cloud hanging over spending pressures there. But if you'll remember, what had happened in July was that we had these riots, all right? So 34 billion rand went forward for overspending as a result of taking care of those riots. There's the issue of public sector wages as well, and I think this illustrates it quite succinctly. The one point you have, like I said, public sector wages. Remember, what he did was he gave 20 billion rand in cash, and that's the finance minister, in gratuity payments to settle those public sector wages. What's still coming up, though, is the wage increases for the next 3 years. So that's the sort of cloud that hangs over on that side. And remember this one, Anlie, social grants. The COVID-19 distress grant comes to an end in March next year. Lot of pressure as to what happens with this grant. Are we going to see a basic income grant come forward? Are we going to see an extension of this particular grant? Nevertheless, it's unlikely that he will pull out grant payments completely. You asked what has changed. Those are some of the spending pressures that may have tilted the bar here and there. But there's one silver lining, and that is the fact that we've collected 169 billion rand more than we had expected from tax revenue. And with that money, now you'll get some pressures from different quarters saying, well, perhaps use that money to go ahead and see to some of the spending demands that are coming from different quarters. Now, what does the finance minister do? Does he succumb to that, or does he go ahead and filter out that coffers, take out more money from that coffers, and then you just have a bigger budget deficit? We put that question to some of the economists. Here's about 3 of them on what the finance minister is likely to do on the budget line come this Thursday.
Already we're starting to see the commodity prices that are important for South Africa's export basket. These are already starting to roll over, suggesting that what we've been gifted with this year is unlikely to persist in the medium term. And as a result, I am still quite skeptical about fiscal consolidation efforts in the medium term, even though the near-term outlook is looking reasonably rosy.
We can't spend our way out of this crisis, and that we need to keep our head down in essentially ensuring that South Africa is on a path to long-term debt sustainability. And I think that can go a long way in feeding into a stronger currency, which then feeds into lower levels of inflation. It allows the Central Bank of South Africa to not have to raise interest rates very quickly.
But what would help the consumer, in my view, is the measures that would announce growth, create employment, investment in the future, so that at least if the economy is growing, our income streams are going to grow closer, if not faster.
So Liberty economist there, Anlie Hattingh, saying that, look, above all, what we need to see is some clarity on whether or not this economy would grow from improving the structural parts of the economy, because essentially what happens is that you create more jobs, you move towards eliminating poverty, and you get more tax money in the coffers. I mentioned the figure 169 billion rand. Remember, what had happened at the start of the year is that the world economy started to grow. They needed the raw materials from South Africa, and mining companies literally sold more, and as a result, by extension, they made more profits and they got more money in tax revenue into government coffers. Now, should we, in a knee-jerk way, react to that and start spending that money? That's the level of caution that's been flagged by some economists and saying that, look, that a commodity cycle is not going to last forever. So a lot to think about in this budget for the new finance minister, Anlie.
Devan, connected to that growth, we also have to look very carefully at our indebtedness.
Yep.
Very clear to everyone, you don't have to be financially savvy to know that the one thing the government cannot do is rack up more debt.
Indeed, and there are a couple of figures which sometimes gets into, jargon spheres, so we won't mention all of them, but like an important number is the debt to GDP ratio. In February, we thought that figure would hit around about 81%. Because of this new sort of revenue that started to come in, that figure is sitting now, economists expect it to be 71%. That's debt to GDP. Our budget deficit, Anlie, and that's the difference between the money we take in as revenue and the money we spend, initially sitting above 9%, it's looking like it will be closer to 5 to 6%. So it looks as though that the finance minister has a little bit of wiggle room this time around compared to his predecessor, Tito Mboweni. But as you correctly point out, if we are going to borrow money, the last thing we need to do, as many economists say, is put that money into what we call consumption spending. So go ahead and put all of that in paying for wages, all of that in consumption items, and not invest. So you're quite right. If we are going to take on more debt, let it be investment and not consumption, because when investors look at a fiscal picture and they see debt all over the place, it's unlikely you're going to get investment.
Just to bring it home to ordinary South Africans very quickly, Devan, because we have run out of time. We've just seen the local government elections. Is there likely to be room, that wiggle room in the budget, for government to spend on very essential service delivery improvements?
I mean, in short, I think you see some of the frustration on the ground in these municipalities because money was not spent for essential items. If we go in ahead and taking out more debt and spend more on wages and other areas, some analysts feel what will suffer is those local government services. We can't afford to do that.
Bad news for consumers all over. Devan Murugan, thank you very much. We'll be keeping our eye on that medium-term budget delivered by Finance Minister Enoch Godongwana on Thursday.